I've seen some VR like houses. So like you can walk in and you just scan around and you can walk through the house.
Right.
That's awesome.
Yeah.
And I think that's going to be kind of like a next wave type of thing.
Oh, yeah.
Hey guys, welcome to another episode of Break It Down with Braydon. Super excited. I got Vanessa Accra and Brandon Bialkowski on today. Thanks for joining me today, guys.
Thanks for having us, man.
These guys are with Bison Ventures and just absolutely rocking it out there, and a couple mortgage people that I've been working with for a couple years now, and been fun to kind of grow together and kind of watch you guys flourish, and excited to have you guys on here.
Yeah.
Tell everybody a little bit about yourselves, kind of how you got started in the business and how you got to where you are today.
So I got started in the business in end of 2015. Just out of college, was applying to dental schools and decided to jump in the mortgage business. My parents have been in real estate for a long time. They're like, just jump in, make some money while you're applying, and just go on your way to dental school. And so got in, and as you can see here today, I haven't gotten out.
Yep.
So, Vanessa and I joined up in 2017, kind of grew out a team. Switched to Bison Ventures about a month ago.
Love it. Vanessa?
So I started, it was around 2010, in the mortgage business. Processor, loan officer, assistant for a broker, so learned it that way. Got talked into being a real estate agent, so I was a real estate agent from 2012 to 2017.
Okay.
And that's actually kind of how I met Brandon, because he worked for the loan officer that I worked with, and I actually didn't like him back then.
She like brings that up so
Every time.
Yeah, she's like, I didn't even use you, but
so I loved being a real estate agent. I did really well at it, but I realized my passion was in the mortgage business, so I had a really good opportunity to go back into the business in 2017, and I actually worked on the team that he was with. And so that's kind of how that all happened.
We got you today.
Yeah.
Cool. How does your experience as a real estate agent kind of help you differentiate between maybe other LOs?
It just gives you it gives you a different understanding of what the real estate agents are really needing and really wanting.
Yep.
And I know what I really needed and wanted out of a lender when I was a real estate agent, and just understanding, the markets and how they're changing in the contracts, and being able to help talk your agents through certain things, or even your buyers, because there's questions I can answer that they don't necessarily have to go to the agent for. If it's something simple. I obviously don't want to overtake anything that they're doing, right? But just having that knowledge has been really helpful for me, just in a lot of different ways.
Yeah, you understand every point of the experience.
Yeah.
Yeah, that's awesome.
Yeah.
How's been the transition to Bison?
it's been great. So it's been a lengty transition. So we had Vanessa stay back for almost a month.
It was like a month and a half.
Okay, it was a month. She stayed back for a month. So I was there, and Stuart Crawford, who's the CEO, great name and reputation in the business, kind of helped us with the transition. His team was amazing in kind of guiding us in the right direction, because I'm not like a systems guy. That's her.
Yep.
And so me going over there by myself, I'm like, what the hell am I doing here? So their team kind of took and ran with everything. They made the transition very smooth for us, to where it was almost seamless.
Yep.
While she was kind of back at our old company finishing everything up.
And I know this was something that you guys didn't just make a rash decision overnight about. Something you guys kind of had to.
Oh yeah, it
for
was
a
one
while.
just one day.
Yeah, just flip of the coin.
No. So we had been mulling the decision around for probably 18 months, and
Yeah.
we did a lot of due diligence as we're kind of out there searching where our next move was going to be. Bison aligned with a lot of our goals. Stuart approached us as we were about to make a decision. We were like, I think we're going to go to VIP. And he's like, hey, dude, I'm starting a company. We're like, all right. Tell us more. So we were wanting something where it was not only a place we could get our loans done, but it was a good cultural fit for us. And with Stuart kind of leading everything, we know his background, we know he's a huge systems guy, great reputation, and it was just a very good culture fit for us, which is huge, and kind of what getting in on the ground level of something like that and being able to kind of help build the culture is one of the main attractors for us.
That's one of the things I've seen about kind of what they've created over there is definitely the culture, and it's where everyone kind of wants to be. And I don't want to say, but it's kind of like the cool kids club, and it really is, though. It's kind of a fun place to be, and just a good energy about it. And so I understand that for sure.
So like, if you walk into our office at our previous company and you walk into our office today, the difference is crazy. Like there's just an energy when everyone's in the office, which most people don't go in offices anymore, but a few days a week when everyone's in the office, it's just such a collaborative effort. It's cool to see.
Yeah. How's the mortgage industry today? I know everyone's kind of asking about that right now with obviously rates going up and stuff. How's it looking out there?
Well, it's tough.
Yep.
When you're quoting rates in the fives, mid fives, that's a bit scary for people, right? Because everybody's gotten used to those rates in the twos and the threes, and your borrowers have changed over the years, where your bigger bulk of borrowers are kind of your millennial borrowers, so they're not used to where rates really should be.
Yep.
So those are always kind of hard conversations to have, and of course, like, it affects their qualifications. Home pricing keeps going up, interest rates keep going up, and so it's just getting tougher and tougher for people to qualify, especially when you're limited on what you can do. So,
right. Yeah, the older generations are like, these are so cheap.
These are
interest
great.
rates.
I know.
What are you talking about? I had an 18. And we're like, what are you talking about? We got a 2.5. What do you mean an 18?
Yes.
But if you look at like the affordability of it, it's never been. Affordability is through the roof, and it's a huge topic, and something that's become an issue, especially in like Maricopa County with how quickly things are appreciating, and all over the country. It's become a huge issue with how quickly rates are increasing, as well as the appreciation, to where it's now not affordable for a lot of first-time home buyers.
Yep. Yeah. So it seems I've heard it a lot actually, where we're not in a recession, but it's similar to a recession because. Everything's price is going up, but people's income isn't necessarily going up unless if they're directly tied to the market somehow. Yeah. Like you and I, we're somehow tied to the market because, if the real estate agent sells the house, that house went up 50% or whatever over the last year, we're still tied to that loan amount or the sales price of that property, where, the operations person or whatever at our company who doesn't get paid on the commissions or the percentage of that sales price, they're not really getting a raise per se. And so there's a lot of that going on right now.
And Arizona has the highest inflation right now. I just saw a statistic on that, which is, inflation's a huge issue for anybody. Yep. Not even just in real estate, but just in general.
Yeah.
Yeah, and that's, inflation is not something we take into consideration when we're qualifying, right? We're still just looking at debts and car payments and all that sort of stuff. So the price of gas, the price of food, the price of things that people are spending money daily on doesn't get taken into consideration. So when you're trying to keep a buyer in a very comfortable payment range with all of these factors, it's just very hard to do.
Yeah. Are you guys seeing any like unique programs coming back? Any ARMs or anything like that?
ARMs, yes.
ARMs are coming back. So when rates are in a decreasing environment, ARMs don't necessarily make sense, but with how quickly rates have been going up, it's a huge topic of discussion right now, especially with when you look at the broad scale of everything. The average home buyer stays in their home for 7 years. If you're looking at a 7-year ARM, you're locked into that lower rate for 7 years. Yep. A lot of that's skewed too. A lot of that data is skewed because of the older generation staying in their home for longer than like a millennial. So myself, I don't want to stay in a home for longer than 2 years. I just get like cooped up and I'm like, get me the hell out of here. Yep. So it's a little bit different, and ARMs are a good solution for that if you're not planning on keeping a home for an extended period of time. And as inflation starts to come back down, it's at a 41-year high right now, interest rates will tick back down, and that will be an opportunity for somebody that's in an ARM to refinance into a fix if that's their long-term solution.
And we're seeing better pricing in the jumbo space on ARMs than we are conventional.
I heard that, which is kind of interesting. Like, if you're borrowing a lot more money, we'll give it to you for cheaper. You know, obviously.
Yeah.
Well, obviously, because a lot of times those people can qualify for those loans and less likely to default. But
Yeah, I mean, but in general, you know, our loan amounts are creeping up to more of that jumbo space anyway, just because of where pricing is.
Yep.
And a lot of buyers, it makes more sense to put a little less down and stay in the jumbo space because their rate is almost 1% lower right now on a 30-year fixed versus a conventional loan.
Break that down a little bit more.
So say someone wants to put 20% down, that's going to put them in the conforming loan threshold under 647-200. If they were to put a little less down and stay in the jumbo space, granted, we have to make sure the qualification is there. The guidelines are different per investor, but as long as the qualification works and aligns, their rate's lower. So their payment, even though they're putting less down, tends to be $200 to $300 a month lower.
And what's the conforming loan limit again?
647.
So as long as their loan amount is higher than that, they're considered jumbo.
Yep. And that's where we're seeing like people in the 800,000 purchase price range. Just put a little less down and go jumbo right now.
How do you coach somebody in between the different programs? Is there like a chart that you show them that shows them their break-even time frame between different programs? If I were to choose a 7-1 versus a 30-year versus a 15, how do you show me those comparisons?
We usually construct a side-by-side comparison on anything that we think is going to be beneficial for the borrower to consider, and then talk them through that information. I mean, ultimately, it's the borrower's decision. We're going to give them the best advice on what we would do and what we think makes financial sense for them, but we leave the decision up to them, obviously.
Yeah. But if like you said, if my goal is to only be in the property for 4 years, then you might instruct me to go one way than another.
I mean, you want to ask the questions, right? There's tons of questions to ask to take into consideration because, you know, we're seeing a lot of people buy interest rate down and things like that right now. Well, it's like, okay, well, how long are you going to stay in the home? How much are you paying? What's the break even? And, you know, going through those exercises with some borrowers that are qualified somewhere else, they just did not have that conversation. And so they're like, oh, well, yeah, maybe this doesn't make sense.
Right. That's kind of what I've seen is the uneducated lender just sells the rate versus like having the conversation and analyzing their goals and figuring out which rate actually is best for them, as opposed to just here's the lowest rate and this is what you're paying to get that rate. It's like, okay, well, let's actually work backwards and figure out what your goals are and then go towards that.
You have to treat every transaction like it's your money and it's your decision. So I would never want to push someone to do something just because, you know, that's what I thought was the best thing for them. If I'm going to take it into consideration like I'm doing it for myself.
Love that.
So, yeah.
Love that. Obviously, prices have been going up. How have appraisals been coming in?
We still see
getting
some.
better.
They're getting a little bit better. So it takes a while for the appraisal market to catch up to prices, which we saw like drastic differences last year. It's gotten a little bit better. I don't know if it's necessarily because of recent comps, but there's time of date sales that appraisers are giving to appraisals now. We haven't seen a ton of low appraisal, and if we do, the agents know that it's going to come in low. It's not like a shock, like, oh, this came in 50,000 low. I thought it was going to come in at value. The agents know. They're like, this is coming in
price,
low.
Whatever. They're like, all right, we're expecting this. It's going to be a nice conversation for us to have with the seller's agent.
Exactly.
Yeah, there was a period of time last year where we were seeing a lot more than usual, and now I feel like in the last like probably 2 months, maybe 3, it's caught back up again to where you're not seeing as big of differences. So, and we're getting a lot more appraisals back at value.
Obviously, rates going up. People are starting to get a little bit more creative. Do you guys have any other loan programs out there that are kind of unique to you guys, or non-QM, I guess they call them?
So
programs.
They're still the same.
There's still a lot of like investor products out there, and as we were kind of talking off there before this, those non-QM like niche products, they do come at a higher rate and cost. But with the rate environment where it's currently at, it's not necessarily a huge difference now. So like when people were locking in the 2s and you see an investor product in the 6s, you're like, why would I even do this?
So where do you see the general market going right now?
I foresee. I mean, we're starting to see some more inventory come back on the market. Granted, it's still not in a place that we're going to see the tangible benefit of it, but as rates start to continue to go up, it's interesting to look at also the statistics on non-owner occupied versus owner occupied.
Yeah.
I don't think it's been higher for non-owner occupieds. We're seeing a lot of major investors come in and buy up the market.
Right.
So
everyone wants to be an Airbnb owner.
Yeah.
Yep.
That and like places like BlackRock that are coming in and just buying and holding these properties for rentals.
Yep.
So the non-owner occupied thing has become an issue because it's pushing out a lot of first-time home buyers.
Yeah, and there's still going to be a huge builder shortage for years. I mean, they're just so behind. So it's just going to continue to create the inventory issue.
Yeah, there's not nearly enough building going on. And if anything, it's like infill right now, which that's not going to catch up anytime soon. And it seems like every week over week, supplies dropping. It's like you said, it's gone up a little bit in the last couple of weeks, but we definitely need more inventory. That's for sure. What other stuff do you guys see coming up in the real estate world here in the Valley?
I think a lot of larger banks now are kind of jumping on board with the fact that we are going to be going into recession soon, like an actual moderate recession. Coaching clients around what that means, because it is a scary word.
Yep.
It's like a taboo word, and
they automatically think crash.
Yeah, like market's going to crash,
upside down.
Home prices are going to go down. But if you look at the last 5 to 6 recessions, home prices have been relatively stable, if not increasing slightly. Rates tend to go down during a recession. So the housing market in general, I don't think will necessarily be affected. And again, rates will start to come back down as inflation starts to decrease. So it's not going to be necessarily a bad thing. But the fear that the median still is in a recession is going to probably scare away a little demand for the time being. I don't know.
Yeah, we're hearing a lot of people just wanting to wait. And it's like, okay, well, if you're going to pay $3,000 a month for rent, you're still going to be able to afford to buy a home. And there goes all your equity, like that you could have been gaining. So they just think they're going to get such a better deal on something if they wait, and it's just not going to be the case.
My thing, too, is if you're renting, chances are your landlord's going to jack up the rents.
Oh, yeah.
And guess what? You're going to be paying a lot more every year going forward because they're going to continue to do that if this continues. And lock in your mortgage payment. Have that for the next 30 years or whatever you decided, what program you decide to go with.
Yeah. Well, I mean,
no-brainer.
and with the recession coming and, like you said, interest rates always generally moving down, that higher interest rate payment is just temporary.
Yeah.
You can refinance and drop that. And now you have a year or two of equity that you've been sitting on. You paid a little bit higher rate, but you didn't throw it out in rent.
Right.
And I'm pretty sure, I thought I saw a statistic where Arizona was like one of the fastest rising rent rates too.
Yep.
So,
Yeah, and I don't think rents have ever been in a declining market. I think rents have always gone up in Arizona if you kind of look at the trends, and so it just kind of goes to show, okay, lock in your mortgage now, which I think is why a lot of people kind of went into a panic mode during COVID, is they're like, okay, this kind of shows a lot of uncertainty in our world. Let's kind of lock in something that I can, which is where my family resides, and that's where a lot of people kind of miss the notion of too, is like your primary isn't necessarily an investment. It's where your family resides and lives, and although you might be accumulating some equity, you're not making money on that on a monthly basis. It's not like it's an investment property where you're making an ROI per month, and that's where people are obviously looking, where the rates don't really necessarily matter for investments because they're just looking to qualify for the payment to then adjust it on whatever they're going to rent. So it's an interesting market right now, to say the least.
Yeah, it will be fun. I actually kind of enjoy it because with the slowdown, I've gotten to enjoy my family more and go up north and do things that I've been wanting to do. So it's been, obviously you got to save your chips as you're making them. So last year and the year prior was a great year. So just building a savings account was necessary because obviously you're going to see a market shift. And we're going to see this for a while now with the lack of inventory and kind of where rates are. So.
Yeah, it's like we talked about earlier. It's definitely cyclical, and you gotta be ready for when it takes a little bit of a turn, and make sure you've held on to a little bit of the bank that you're not freaking out like a lot of people are doing right now. It's
a good thing I didn't buy that Ferrari last year.
But I will say, in these type of markets, you can thrive very well because your great relationship
Mhm.
lenders are going to win in these markets. It's going back to the basics and going back to the relationships and taking the time with your clients to help them fully understand everything going on. So.
Well, I think that's where you've differentiated yourselves too, is that you guys have a lot of partners in the industry that will support you guys, and you'll continue to help them grow. I guess that's a good question, is what are some of the things you guys are kind of coaching your agents on, helping get deals done?
So, I mean, a lot of the agents that we work with are very seasoned. They're some of the top professionals in the Valley, so they don't necessarily need coaching from us per se.
Yep.
We're just making sure that everything that we do is as solid as possible. Our communication's on point. We are starting to get into a lot more video stuff, and it's something we got away from as we were doing the transition. I think video is huge, and you do obviously this podcast. So I think video is something that we're trying to get our agents more into.
Yep.
But
yeah, you guys got that awesome green screen room there right in your office, which is amazing.
Yeah, we actually shot a video yesterday.
I saw that. Which is an amazing space, to be honest with you. More people should be taking advantage of that and using that, because you guys even have the whole team there that helps with the editing and everything. So that's a huge value add. It really is.
Mm-hmm.
That's kind of what I hope to create with this here. Is we've got a place now for people to come in and use it and create value, as opposed to just offering the baseline of title and escrow. Of course, we've got that, and so it's having ancillary services and stuff like that, which differentiate you guys, I think, is huge.
And like not only that, like educational videos coaching your clients, because there's so much in the media right now, negativity around the housing market right now. It's coaching your clients on actual factual data, and how to back that up.
Well, and I think it's just really helpful right now to, when we're coaching our clients through where they stand on their qualifications and their options, to help your agents understand that as well. Give them all that information too, because we're seeing a lot more files at much higher DTIs. So it's like, hey guys, we really need you to stay here on taxes, HOAs, like all that sort of thing, and don't go out there and write an offer that's, we've said you're qualified for this, and it's like, yeah, the pricing is there, but all the other factors are not, right? So like that sort of thing helps a lot in this market too, because then we're not scrambling to fix things, because everybody understood the exact parameters and what could happen in interest rate. Like, qualify them higher. Like, you've got to leave yourself some room. So
that's a good point, though, that you bring up. So, like, for self-employed people, it's pretty beneficial to talk to you guys before they file their taxes.
Oh, yes. We have a lot of that because, the benefit of being self-employed is that you've got all those write-offs. And I always say you pay to play. So you want to accomplish something, such as purchasing a home, you're going to probably have to pay. And that's just the way it is. We do tons of self-employed and help them understand what needs to be done, and how, like, work with the CPA or, whoever's filing, to help understand how we calculate income, so we can, I don't want to say manipulate is not the right word.
That's not
it. It's not manipulate, but help them understand how we calculate, so therefore it's the best benefit that they're using for themselves, how they're structuring their how they're structuring their taxes. So that's a huge thing right now. And you want to make sure you give yourself some space on that also, because once those tax returns are filed, you are stuck with those things for another year. So
because it doesn't really matter how much they got in the bank right now, right? It's all based on income.
It's income. You have to have income.
I mean, they repealed the COVID guidelines around, like, business bank statements and P&Ls and all that stuff, which was huge. So, like, if you're filing your 2021 taxes, a lot of our self-employed clients have been we're gathering with the CPA to kind of determine what next steps need to look like, how much income, as she was kind of saying. If they've already filed, bank statement programs are coming back. There's tons of bank statement options out there now. Again, there's niche products for investors too. So you're not necessarily dead in the water with a lot of this non-QM stuff coming back.
Just to kind of bring it back, I want to reiterate what you brought up, though, is video. Video. I was actually in a team meeting this morning, and I was telling them, like, this is all you need to be focusing on right now, because the way we are with social media and how we're getting out to the masses, it's video. I mean, your stagnant posts get, like, maybe 10 times less the amount of views than a video would actually get, and people are actually wanting to engage with video. That's where, partnered up with these guys over here at ITR Visuals. A quick shout out, ITR Visuals got you there.
Thank you, ITR Visuals.
They're doing listing videos, any individual videos in here, obviously shooting the podcast and helping me with all the editing, but, leveraging these guys has been a huge portion of my business this last quarter, because that's where everything's at, is video right now. It's like, if you're not putting yourself out to the masses, and if you're not doing those things, you're probably missing the boat here. And I always tell people too that, like, you're not trying to do the video to sell the listing per se, but it's to get the next listing, because as long as the house is priced in this market correctly, it's going to sell.
Yep.
Right? Like, there's no inventory, so as long as you're not, like, ridiculously asking for some crazy price, it's probably going to sell.
Yeah.
So take that video to the next listing and show them, hey, this is what I do for you. This is how I'm going to help, market your listing. And then they're like, oh, wow, the next agent's just going to post it on MLS. How did you stand out? And how did you differentiate yourself?
Exactly. I mean, it's never been more big and popular, especially with the younger generations too. I know I get bored if I'm just scanning and reading stuff rather than watching like a video. If the video is exciting, it's going to get my attention.
Well, and the way that our world is going with the metaverse and NFTs and all this stuff is like, it's an antisocial world. And so it's like these kids are growing up with Oculus on their face and hanging out with their friends in the metaverse, as opposed to like human interaction, which is scary to think of, but like that's where the world is going.
Yep.
Like big companies are doing training now on Oculus, to where, like, as opposed to going into the warehouse, you put on this Oculus and you just simulate as if you're, working at the warehouse to learn the stuff, which is crazy to think that that's like where we're going.
It's insane.
I've seen some VR like houses. So like you can walk in and you just scan around and you can walk through the house.
Right.
That's awesome.
Yeah.
And I think that's going to be kind of like a next wave type of thing.
Yeah.
My 16-year-old came to me one day trying to explain to me NFTs and how he can sell and make money and all this sort of stuff. I'm like, what are you talking about? Like, I was just playing sports and riding horses and doing nothing at 16. Like, how do you even understand this? Like, my mind is just blown. Like, it's crazy.
Yeah.
It's so crazy.
Yeah, it's a different world that these kids are growing up in, that's for sure. As weird as that sounds, and it's not like we're old, but it's definitely a different demographic that they're coming up in. So.
Yeah, for sure.
Yeah. What other stuff you guys want to leave everyone with, kind of in the industry, or any kind of tidbits?
I don't know. I got nothing else, man. You've tapped me out.
What are some of your favorite hobbies? I know you love horseback riding and competing in what do you even call it? Dressage?
No, it's Western reining.
Western reining, which is explain to me.
It's so the easiest way to explain it, because a lot of people have seen it, is if you've watched the show Yellowstone, there are reiners on there. So when you see them showing off their horses and they're running and sliding and spinning and doing all that stuff, that is actually reining. Yep. So cowboy is actually what I've
It's funny when
heard.
I saw that, I thought of you.
Yes. Every time I say that, most people get it.
Yep.
If you don't know what it is, it's hard to explain. Cowboys created it a long time ago in order to like show off their horse's talents. So you run a series of patterns and have to do certain things in the arena and get judged on it. It's really fun. It's really hard.
Yep.
But it keeps me busy.
You don't make any money on it.
It keeps me from killing this one.
Yes.
No, I'm kidding.
No, it seems like an awesome hobby. And,
yes, it's a hobby. And other than that, it's just, daily life and gym and work. And
seems like you've developed quite the relationship with your horse, too.
I do.
Saw the kissing video that you posted the other day.
He's such a lover. He's such a lover. Yeah, I love him.
And how about you, Brandon? I know you love golf. What other stuff you like doing out there?
Golf, I'm a big foodie, so if anybody knows of any cool new restaurants.
Gluten-free foodie.
Yeah, that's right. We went to Etta on Monday.
Oh, nice.
Super gluten-free there. Yeah, a lot of pastas and stuff.
Yeah.
I love that.
Yeah. Yeah, I mean, just hanging out with my wife, going to try new food spots. I've ventured over I used to live in a bubble in the Scottsdale area to where I wouldn't leave like a 5-mile radius, and now I'm venturing into Phoenix.
Nice.
So
I heard they got a lot of cool new restaurants actually down there. I never go down there, I'll be honest. I'm kind of the same way with you. So I get caught in my bubble, and we go to the same 3 restaurants every night. Mm-hmm. And it is what it is. But
there's a ton out there now, and a lot of like cool, like low key spots that we've been trying. But other than that, golf. Been working out, trying to get physically fit.
Good time to do that.
Yeah.
Right before summer, perfect timing.
Yeah. Headed to Greece in September, so got to get the body in shape.
Love it. Well, if people want to get a hold of you, how can they reach you guys?
You can give me a call.
Yep.
480-603-5901.
Love it.
Yeah.
Or social.
Or social, at Brava Team on Instagram.
I don't even think we brought that up. Yeah, the Brava team.
Yeah.
Yes.
At Brava Team on Instagram. We have some good educational stuff as well as some funny outtakes and videos. So
You guys do like a weekly market update, don't you?
That's every Wednesday we do a market update.
Yep.
So when we get out of here, I'm gonna have to do that. Thanks
Your
for the
turn.
reminder.
Your turn.
So that, and we just do like funny things. So we try and keep it a little more light and entertaining.
Yep. Love it. Go follow these guys, the Brava team. They're doing awesome stuff. Amazing lenders here in town. I get the privilege to work with them. Just killing it, and been fun to watch them grow. Thanks, guys, for coming on. And stay tuned for another episode of Breaking Down with Braydon. Thanks, guys.